Hey guys, welcome back to another video. Today we're going to be doing a Q&A video with one of my favorite lenders. I'll let her introduce herself.
Hello, my name is Ameeyah Whitehorn. I'm with Matador Lending.
I know a lot of guys, especially since I market to first-time home buyers, a lot of times they have a lot of questions but they don't know what to ask. I'm going to pick her brain. I'm going to ask all the questions that you should be asking and questions that will get you started in the process. So we're gonna go ahead and jump into this video now. Okay, so the first question is, I'm gonna go easy. How do you know you're ready to be pre-approved?
I think at any point, if you're ready to buy, you're serious, even if you don't have the money ready, even if you don't have the right credit score, the first step is even wanting to invest and wanting to get pre-approved. I would say that's how you know you're ready. If you're serious about it and it's something that it's a real goal of yours,
yeah, like super responsible,
then you're ready to try and get pre-approved.
I have low credit. What are my options?
There are a lot of options for buyers with low credit. So any kind of traditional loan, if you're looking for your primary home, you're probably going to go with a conventional or an FHA loan. If you're a veteran, you may have some benefits. You can go with VA and get 0% down payment. USDA is another one of those programs. But for low credit score specifically, I recommend FHA. And it doesn't stand for First Time Home Buyers Association, which a lot of people get confused with, and it's reasonable.
Yeah, before I started real estate, I thought it stood for First Time Home Buyers.
So most people do. It's a reasonable, mistake. Right. But, it actually just stands for Federal Housing Administration. And the good thing with FHA is that they allow buyers with lower credit scores. Aside from FHA, they actually have their own programs within FHA. Down payment assistance is one. Mm-hmm. And then that's kind of like another umbrella. There are all different kinds of down payment assistance. And they also allow lower credit scores. Depending on the buyer, if you've got the income, maybe you just have something on your credit report that's keeping your score down, but the rest of your accounts are in good standing, you're paying your bills. If you've got a clean file, if you will, something that's straightforward, you can go as low as $550.
$550. Hear that, guys? $550. So as long as you have like a clean slate, and the only thing that you're struggling with is, okay, I have $550 because I don't know,
maybe
credit.
You missed a payment, or maybe you closed an account, or whatever it is. But the rest of your file has to kind of be crystal clear. Yeah.
So there's option, guys. So stop thinking how they had you in the mindset like 10 years ago where you have to have 700 credit, you have to have 20% down. It's not like that anymore. There's so many programs, as you mentioned. There's so many options for you guys. You just have to ask. You have to find a lender. You have to find a realtor and get in there. I need help with a down payment. What are my options?
Yeah. So down payment assistance, that's one option. Another option, this is huge, and I think a lot of my buyers forget, but if you're a W-2 employee, most of us have a 401k. Most of us, and you may not even know that you're making contributions to this account, but you have this savings account, and you're able to use those savings towards your down payment. Another option are seller credits.
Concessions.
Right now in this market, sellers understand that the rates are high, and so we're already paying a little bit more. Taxes are kind of high depending where you're at, and sellers understand this, and so they're actually able to credit you. You guys
may not know this, but you can buy points to buy down your interest rate, except when you have certain down payment assistance. So with T-Shack, you can't buy points because it's at market rate. So what you're getting is market. So if the market is saying 6.3 or whatever, that's what you're getting. You can't really buy points down. But if you don't use the down payment assistance, then, well, at least that one you can.
So there are certain limitations to T-Shack, and it's just to protect the buyer. That's all it is. We don't want to charge you this much. We're already assisting you.
Right. If I'm relocating, because I get a lot of that, if I'm relocating, how do I go about getting a loan in that different state?
The first thing is that you want to make sure that you have a job in the state that you're moving to, or that your job will sign off and say that you work from home, you work remote, and it's not an issue for you to live there. You'll continue to receive the same salary or whatever it is. But that's the first thing. You want to make sure that you have a job, because you have to pay your mortgage.
Exactly.
So relocating, I would say have a job
With
and
the offer letter.
Yeah, with your offer letter.
Okay.
Yeah,
With an offer letter.
Yes. Yeah, that's something that I'm gonna look for, something I'm gonna ask for to make sure that you're not just saying, or if you've already started and you're already receiving paychecks, the pay stub. That's enough proof. After just making sure that you have a job, everything's pretty standard from there, I think. Income, we're looking at your credit, we're looking at your monthly debts from your credit report, and then of course once you're pre-approved, we get with Ameeyah.
Yeah.
And so it's pretty standard after that, but that would be, I think a lot of people don't realize, like, I've heard people say like, well, I have the money to close.
Yeah.
But you don't have the job to pay every month.
Right.
And maybe you do, but we need to prove it.
What documents do I need to provide? What documents did they gather before they even talk to you to make the process go faster?
Yeah. Again, I'm looking for your income, and I call it ICE, income, credit, and expenses. So as far as your income, I'm looking to see your W-2s or your 1099s from the last 2 years. If you're self-employed, I'm looking to see your bank statements and your tax returns. Maybe you don't file, right? Like maybe we don't claim all the money on our tax returns. That's okay. That's where bank statements come in. We have a separate program for borrowers that are self-employed who don't claim everything on their taxes. And that's a bank statement program. So something else. Credit. I'll run your credit and expenses, and I'll review that. I just need your ID, state ID, driver's license, or passport. I just need to see that you've got some money saved, if that's the case, if we're putting money down. That's mainly it. Bank statements, pay stubs, and W-2s and 1099s or tax returns. Really popular programs for self-employed and 1099 wage earners. It's a bank statement program. That's literally the name, bank statement program. And we use 12 to 24 months of your bank statements, assuming that you deposit your cash or put your money into your bank account. And so then we don't look at your tax returns, because we understand, what works for one person doesn't work for another.
So if you're not W-2 and you are 1099 and you're writing off a lot of stuff, because I know you be writing off a lot of stuff, then there's options.
As we do.
I write off everything. If I buy you a gift, I'm gonna write it off. If I want to buy an investment property, how would the process and qualifications be different from buying a primary residential?
Okay. So the main things are, on any investment, the minimum down payment is going to be 15%.
Okay.
Doesn't matter
15%.
if you speak with me or Joe or Adam or Eve.
Right.
15% is going to be your minimum down payment. Now you can go almost any route on this. You could go conventional, not FHA. You can't own an investment with an FHA. But you can go conventional. You can do bank statements. You could even, there's a very specific program for investors called DSCR, and that's a really cool program. I'll go into a little bit more detail about it, but investors are pretty much going to have a standard process also. I'm looking at your income. Depending on the program that you work with, I'm looking at your income. The DSCR is something that my investors love because their taxes are all over the place, and DSCR doesn't require any income or employment verification.
Okay.
So that's amazing. My investors love that. And we kind of just, instead of qualifying the buyer or borrower, we qualify the property. So there are two parts to the appraisal. There's the 1003, gives us the market value of the home, and then there's the 1007 that actually gives us rental comparisons in the neighborhood. And that's how we qualify it and structure the loan. So that's really cool for investors. No income, no employment verification. You can even own an investment if you don't own a primary home.
Yep. So I bought my house with a really low interest rate, and it's with an FHA loan, but people are still marketing to me to refinance. Would it benefit me, or should I just stick with what I have in today's market?
So in today's market, a really good rate would have been something you got in the last 2 years, something between 2 and 3%. So let's say that. I would never refinance you out of that because it's really good. We don't know when we'll see those rates again, obviously. What I would do, the only reason you may want to refinance is to maybe take cash out of your home.
Okay.
So if you have that 2-3%, maybe it is worth it to take a 5 or 6% if you're taking $100,000 out of your home. But I'd say that's the only reason you'd want to refinance. And even then, you may not have to refinance out of your loan. You can actually take out what's called equity line, a line of credit on your house, and just get the cash out. And that's a separate mortgage. It's what's a second lien or second mortgage, if you've heard it.
And do you have to have good credit to have an equity line of credit?
It's going to work the same way, right? So 620 is going to be the minimum, but ideally, honestly, 660 is going to be a better starting point.
And since we're talking about taking cash out, I do want her to clear some things up, because a lot of first-time home buyers have it in their head that when they get approved or pre-approved for $200,000, they can buy a $100,000 house, and they're saying that they will just take the other $100,000 and use it to buy furniture and things like that, and that's not how it works. So I'm gonna let her explain it.
Your max pre-approval amount is not, this is all the money that we're going to give you. It's just what we can give you if you decide to use the loan. But it's a home loan, it's not a personal loan, so it all goes towards your home. As far as having extra money, I guess, let's say you buy a home that needs some rehab, that's an option. We have something called home style or 2 or 3K. Those are both the same ones, a conventional option, ones with FHA. So if you have a lower credit score, you can rehab a home, and it doesn't have to be an investment. It can be your first home. They allow a certain amount of time, same down payment, 3 to 3.5%. You can actually they'll require a little bit more. There are some finance contingencies, but ultimately you get this rehab and your purchase wrapped into one loan at almost the same interest rate. So you can get a customized home. As far as HELOCs go, they're a little bit tricky. In Texas, there are a lot of laws that protect our homeowners against being charged too much for taking their own equity out of their home. So there are a lot of laws. It's a little bit tricky here. The interest rates on HELOCs right now are around 9 and 10%. And so in Texas, if they're at 10%, we're actually not able to close on them. Again, it's to protect the homeowners. We don't want to charge you all of this if it's not actually worth it, or something happens. So the way that HELOCs work, they're almost like a credit card for your house. You can take out $100,000, hypothetically, you can take out $100,000 to go do rehabs or pay off your debt. And so this is actually where it comes in, that you can get this loan on your home and use it for personal needs. You can pay off credit cards. Again, you can pay off personal loans, your car, whatever you want. And it doesn't amortize. And what that means is you don't pay it off. You just pay it down. So if you only use $50,000 out of that $100,000, you still have $50,000 to use. But if you pay your balance, well, now you've got $100,000 to use again. So that's really cool.
I just wanted to stop the video right here so that I can go ahead and say, if you're serious about buying a home, owning an investment property, or you just want to pick our brain some more and we're not answering the questions that you have, I want you to go ahead and follow us on Instagram. Go ahead and give us a DM, comment on some pictures, or even if you want to comment on this video and have me reach out to you, go ahead and we'll get right to you. What does the underwriter look at? Because I feel like everybody, as soon as they hear underwriting, they're like,
So underwriting is amazing, right? Like when we get into underwriting, that means that our loan is at face value approved, and they at least are thinking about funding us. And so underwriting is where they file, or they comb through our file with a very fine comb.
Her file.
And and here's the way that I try to explain it. If I met you today and you asked me to borrow $1,000 and said, just trust me, I'll pay you back, here's my phone number. You know what, like, how would I give you the $1,000? I'd be like, well, where do you work, or where do you live, or who do you know? And this is what underwriting is. Underwriting is saying, well, you said you have a job, but we're going to go and double check that you have a job, and you said you make this much. Well, we're going to get what's called a VOE, verification of employment, and we're going to check with your employer that you make this much. And well, you said that you're just a co-signer on this car, but we need bank statements. We're going to double check that this person is paying that car note and not you. They're just making sure that we're saying who you're saying you are, and that you're able to repay this loan.
Like, what is the most common reason a loan will fall through?
Oh, I don't want to say that there's a most common reason, because every file really is truly different in its own way. There's not one file the same as the next. But I think a big thing, a big misconception is people think, well, we're in underwriting, we're getting the loan, and then they say, well, I got this offer for a credit card. And then they go take out one of those 0% interest for 12 months on their furniture.
Don't you dare.
Or you don't want to take out any extra debts. So one thing that we look at your debt to income ratio. And basically, again, that's any monthly debts you have on your credit report and how they add up with the income you're bringing in monthly. And if we cannot prove that, or maybe you can afford that new car payment, but there's a certain ratio. Some
people think that once you get your credit checked one time, they're not going to check it again. So that's why they think they can go get a car, they can go get a credit card because they've already been approved for that. They don't know. They're going to check it again.
So your credit is pulled before you get your pre-approval. It may be pulled one time in underwriting to check, but we're definitely pulling it before closing to make sure nothing has changed.
How do you know a lender is shady? Or how do you know a lender is actually going to get you to the closing table? Because sometimes it's not always the buyer. Sometimes you're not working with a good lender.
I will agree. I've worked with different people in the industry, and I don't want to say there's a tell. Because things happen in people's lives, and maybe something happens along the way where they're not able to get you there. Maybe it's something personal, or maybe they're switching jobs, or things happen. So I don't want to say there's a tell, but I will say that it matters very much if the person's, number one, communicative with you. I want somebody to answer every question. I don't own a home yet. So I'm on this side, but being on this side, I want to answer every question for my clients. I want to answer every question till you don't have any more questions. Someone that is being pushy, I think, someone that is saying like, well, you're not going to get a better deal, or someone that's not very supportive. I pride myself in being supportive of my clients, whether they're ready to buy right now. Maybe I get them pre-approved and they go shopping and they say, you know what, it's actually not for me. You know what, good for you. And then
it just has to be a right fit. Not all lenders are bad lenders. Sometimes it's just not a right fit. Same thing with, you're a realtor. Sometimes they're a good realtor, they're just not the realtor for you. Like millennials, Gen Zs, they want somebody that's gonna text and email. They don't want to be on the phone all the time. But like an older, somebody like baby boomers, what is the other generations? The older people, they want you to call them. They're like, don't text me, don't email me.
I have a client, a few clients right now, but one specifically that I've gone to her house and collected documents, and I'm sat online and actually filled out the application on my computer for her. And then I have another client who I cannot get on the phone with, but they respond to my Instagram stories, and I can always send a text and they'll get back to me. I think a big thing, don't worry about shopping around.
Yeah, that is a big thing. When I first started in the industry, that's what I was taught, that you should tell your client, shop lenders. Well, it wasn't when I started in the real estate industry, it's because I started at Realtor.com. If you guys don't know, it's OpCity. So OpCity, you see me wear the shirt. I used to work at OpCity, but it's now Realtor.com. I basically would scrub leads for lenders, realtors, and credit repair. And the way that they had us with the script is, you can shop around lenders. You can shop around lenders. So once I got my license, that was in my brain. So I was telling people that, and then I quickly started realizing it doesn't matter who you talk to. The only difference is if you're familiar with one program, but they need another program that you're not familiar with, and but another lender knows that, then that would be something where you're like, okay, well, I'm sorry, I'm gonna have to work with them because they know what they're doing, so I know that they can get me to the closing table.
Yeah.
But as far as like rates, the rates are rates.
Yeah, we kind of, here's the good thing.
Overlays.
So if you work with a broker, and I say don't fret when, please go shop, because exactly what you said. Some people have certain programs, some people don't. Fortunately, I work with over 40 banks, and I want to say I probably have a program for every single scenario. So, but don't fret, because again, it's who you're going to work best with, who has your communication style, who's going to understand the questions that you're asking. Language barriers, that's a huge thing. I have clients who have spoken with Spanish speaking LOs, but then they don't speak the best English, but we get along just great, and we get to the closing table. So it just matters who you speak with, who you're comfortable with, but also you don't have to worry about dinging your credit. You have 30 to 60 days to shop around, and for different lenders to pull your credit without it actually hurting your score.
The same thing goes for a realtor too. Like, don't think that you cannot fire a realtor. I hate to say this, but you can. We can fire each other, honestly. I can fire you, you can fire me if it's not working. And it doesn't have to be a, oh, I hate you, nasty situation. It's just like, hey, maybe your schedule doesn't work with my schedule, or I don't think you have enough time for me, or you're just not feeling comfortable. You want to be comfortable through this, because when you think about it, your lender, your realtor, it's a team effort. Your credit repair, whoever, your title company, it's a whole team. And you're going to be in bed with them for months. So you want to be comfortable, You
want the right team. It really doesn't matter who you work with. It's not just, not for me. It's not. And
you want them to work together well.
Yeah. And so just to like touch more on that, this is my name. This is my reputation, right? I'm more concerned with that you're happy,
right? Exactly.
And that you're comfortable in your home, and you're comfortable in your mortgage, and you're, it's not going to be a few months down the road and you're like, well, this girl put me into something I'm not comfortable. What's going on? So you
have to communicate. You have to tell us, because if you don't tell us, then we won't know. And you can't blame the lender, you can't blame the realtor if you didn't say anything, because we go off of what you're telling us, how you are acting. If you're acting happy, if you're telling us you're happy, then we think that you're happy. But at the end of the day, a couple bad apples made realtors and lenders look bad. So people like, I want to do this on my own. I want to do owner financing. I don't want a realtor. I don't want this. When a realtor is supposed to be like basically your backbone through the transaction, and a lender.
Nonetheless, like, again, we're a team. We all have the same goal in mind. We all want to get to the closing table, but the right way, right? We don't want
like, we're not sleazy.
Sour after.
Like, we're not sleazy. Like, some people made it seem like realtors are sleazy. I'm not saying there's absolutely no sleazy realtors or lenders. There are, but we are not. Like, if you don't want it, tell me you don't want it, because if you don't want it, I don't want it.
Right.
So that's basically all the questions we have for today. I will definitely have her on the channel again.
Yes.
Thank you so much for answering the questions.
Thank you for.
All right, guys. Thank you guys so much for watching. I will see you guys in the next video. Bye.
Bye.